All right, greetings traders, Sam here, TradeDevils-Indicators.com. Okay, as many of you may know, we have just launched our newest product, Algo Studio Pro. Now, this is a very powerful product that offers many different ways to use it. Now, we have done a couple of webinars just as we've gone through the introduction, and we have shown some basic applications. Some of you may have seen those. And many of you have already downloaded the trial. Some of you have already made the investment into the product and are underway creating your own algos. Well, one thing I've learned and continue to learn is that it has far more capability and potential for customization than might occur to you upon your first look at it and its capabilities. And it can be a bit challenging getting started with it without demonstration of how to put an algo together piece by piece, and then ending up with an application you like. So our intention with this playlist here is to offer a wide variety of algos, and not just the final product, but the process of creating them, so you then, armed with this knowledge, can start to create your own algos. And there is really almost no limit to what you can create with it. So in this video, I'm going to walk you through the creation of a relatively simple indicator-based algo. And then we're going to optimize its ATM, see if we can come up with an algo that offers a profitable outcome. So thus, this will be the first video in a series of videos that will offer you many examples and will increase the complexity as we progress. But I want to start with just something very, very rudimentary here with just easily accessible indicators. These are all, well, with the exception of one, native to Ninja. And we're going to just go ahead and dive right in. So what you see on the chart here, this is, of course, a 2,000 tick chart on the ES. I have, as I always do for all of our videos, I have our initial balance indicator, which I keep on the chart just to kind of frame up the day. I have our toolbar, because I use that often as we're going through application. And then on the chart, let's just review it here quickly. Let me actually open it up here and take a look. On the chart, here was I just went through, toolbar, initial balance, just the price line. I've got a 200 period SMA, just native Ninja. Right, you see right here, a 200 period SMA. I've got the native Ninja CCI, Commodity Channel Index. I've got the native Ninja MACD, another EMA, right? I've got an SMA, this is an EMA. Again, native Ninja, that's the magenta line here. And then this is a free indicator, but you have to get it over on the Ninja Trader ecosystem. So I just bring this over here. Just go to Ninja Trader ecosystem. You can just search right here for OBVM, the on balance volume modified, right? So I'm going to use that. Again, this is completely free, right? And if you own Ninja, you can download that. And we're going to use that down here, so you can see I have it on the bottom. And I have this set for a 5-10 spread here between the two lines. All right, so that's what I've got set here. Now let's just go ahead and take a look at this. So as you look at a chart like this, and this is just a kind of an example of a starting place, how you might approach something like this. This is where kind of looking back in hindsight as to how the market has moved throughout the course of the day and how the indicators responded. This can be quite useful, and it may be a good starting point for putting together your own algo. Now again, this is indicator based. We're not getting into anything related to swings and pullbacks and any of the price action that you can do. I want to start with something that's just very basic, that's indicator based. So thus the three indicators that I have here, a CCI, I like, it's more of an oscillator. It's unbound, right? So we can go, there's no limit on how far we can go, but there are certain tendencies that are very consistent with it. Above the zero line tends to be trending. And when we get to minus 200 or plus 200, as you see here, it tends to be about the limit before you start to see the market pull back, right? If you understand what the CCI is doing, it's relatively simple. This is a 20 period. You're just essentially you're just taking, if I grabbed a line, you're just taking an average of the prices over 20 candles, and then looking at the price relative to that range, right? It's not terribly dissimilar to a stochastic, slightly different, but it's unbound, right? So we have this for the oscillation factor. I've got a MACD for a bit more of a trending type of an indicator. And then the OBV, because I'm using a tick chart here, but I want to get some representation of volume increasing or decreasing throughout the course of the day. And as usual, I'm just using the most recent data. I've got a chart here, everything we're going to look at here. I've just gone back 30 days, which is a good starting point for testing, back testing, I should say, any sort of an algo or a strategy. 30 days is a good starting point. So we'll work with that. Now again, this is on just Fridays. I'm recording this on Saturday the 25th, and I'm just looking back at Friday. And if I were brought up this chart and I was looking at the indicators and saying, well, where would be the ideal location to where I might want to participate in this price action? Well, of course, this is the benefit of hindsight. But we can look here, and I've just marked them out with these arrows. Well, okay, right. So right here, as we get this big up push. Well, we can see, looking down below, we can start to see there's some consistency here. Oh, let's use an arrow here. We can look here. So, well, there, right at that location here, we see the CCI going over 100. We see in the MACD, right, again, this is as rudimentary as it can be. We see the MACD going, the spread between the two crossing zero right here. So we get that difference above the zero line. So thus additional trending right here, as you see it. I don't know if I can get the arrow to print. We get this trending right here, and then we look down below, same thing, right here at this same location. We see the OBV, the 5-period crossing the 10-period moving average, right? And then again, we have just same thing. Going a little bit further, here we see it again. Here's OBV, or pardon me, the CCI crossing the zero line, the MACD crossing the zero line, so the spread, the histogram goes positive, and then the OBV, same thing, right? We've got the OBV above the signal line, or excuse me, above the slower moving average. So the 5 is above the 10, probably a better way to say that. And then we look over here, we see the same thing coming down here below zero, crossing here, histograms below zero. OBV has the 5 has crossed the 10. And the one other variable that you may have noticed on the chart is I've got the 200 SMA. So one of the very first filters that's commonly done with many algo strategies is that we want to be looking for trades with the trend, and we're using the 200 SMA to define the trend. So as a starting point for an algo like this, a simple starting point might be, okay, well, I'm only interested in longs when the market is above the 200, and I'm only interested in shorts when it's below the 200. A reasonable starting point to keep you on the right side of the market, so that might be something to consider as a starting point. Well, from there, then we can start filtering in some of these conditions to build our algo, and ultimately, potentially, if you're inclined to do it, right, let the algo auto trade for you based on these signals. Now it takes a little bit of conviction and confidence to release the trading to an algo or an auto trader, and that's something you have to build a little confidence in. I'm going to kind of show you the process of how you would build that confidence to turn it loose, if you will. Okay, so with that, let me pause for a second, and I'm going to go over to another chart here, which I've got prepared for this. So bear with me a second. So here I have Algo Studio applied, which is just, you'll find it in your indicator list here, Algo Studio Pro. Now, the first thing we'll look at here, you're going to need to put in your email and your contact ID, just like any of our indicators. Now, when you start, you may not have a template created. We're going to go through the process of creating a template. I have a finished template here, which is what we're going to build from scratch. But just so you know, that's where you would, as you're creating algos, if you brought up Algo Studio Pro with nothing in it, you're going to need to go here, and you can see, well, here I've got a bunch ready that are ready to go, just for this playlist. Now, as we work down here, a couple of things to take note of here. Most of this you can leave as is. Backtest commission, use whatever's appropriate here. I'm just kind of using an average. That's pretty standard. For futures commissions, but you want to include commissions in your backtest results, so I would encourage you to put that in. You don't need alerts for this period where we're doing backtesting. Now, as we work down the list here of the parameters here, additional things you might consider is whether you want them on the chart or not, is whether you want the equity curve and the statistics. I'm going to leave them off here for this demonstration because I don't want to get ahead of ourselves, right? We'll get to that. So, but just so you know, if you wanted them, because it's going to put a big gray box up here, and if you don't want that on your chart, well, this is where you can have them off by default, but then you can always get to them, but just by clicking the drop down here, and then you can add them back on. Everything else here is just standard ninja stuff. Okay, so let's get our algo and start putting one together. Okay, right, so here's Algo Studio Pro. Now, as many of you have seen, whether it was in our introductory webinars, or if you've downloaded and you're starting to play with it here a little bit, when it first comes up, well, of course, this will all be blank. There'll be nothing filled in. And you have two areas where you can build your algos. You can do it through design, where for example, if I click here, you can see what the conditions are. That's one way to do it. I find that it's a little faster to work with the logic, where I can see the list of conditions. Now, what we're creating over here doesn't change. Whether I'm over here doing it, right? You see it here, or whether I'm doing it here. It's up to the individual, or you can do it either way. I just find for relatively simple algos, it's just a faster way to do it. So let's start with just some very rudimentary conditions. Now, first off, we always start with, it'll default to entry conditions. And you want to make note here that you are looking for the and to be active. So there's two ways we can do that. One, here you see and, right? Well, you can change that to or. But careful that you don't make that switch, because you're going to have dramatically different outcomes here. So for entry conditions, we want the and highlighted. You see it here in red. So we want all of these things to be present. So this and this and this and this to be present to initiate a trade. So let's start with just something basic like the RTH session. So we only want to look at trades that happen after 9:30 a.m. using EST. And that are done before the market closes at 4 p.m. Right? So those are, change them to your heart's content, right? But I'm just, for this demonstration here, we're going to do 9:30 to 4 p.m. Okay, right? So that's where we start out with just a time filter, so that we stay with the RTH, right? Which would be consistent with the IB. Okay, number two. Now, as we look here, I'm going to pull this off here. So CCI. With CCI, let's bring this over here so you can see it. You can make this full screen if you like it. So, back to our earlier example here, where we see the CCI scream higher. We see all of this big push here as the market moves higher. Well, so first thing, let's CCI, the current bar, the current bar's period. Here's where we have all sorts of different conditions that are available to you. And there's a little bit of trial and error as you're getting used to this. But for the sake of perhaps following along here and creating the same algo, just for the learning experience, well, that's a place to start. Well, okay. Well, so what I could do here is go new, and then if I type, just to show you the process, if I went CCI, okay, well, here I'm going to see CCI, all right, and it's a 20 period. Set this to whatever you like. I'm just happen to be using a 20 period. It's pretty standard for CCI. So I'm going to use a 20 period, which is now what is in here, the CCI 20 period. And I want the CCI 20 period to be greater than 0, to be greater than a fixed value. Here's all my options here. I want a fixed value of 0. So I want it to be greater than 0. That's kind of a long-winded way to get here, but just so that you're clear on what you're doing. You've got a number of operators here that are available to you, right? It's pretty standard. Equal to, not great, right? I'll let you fuss with those yourself. So you could do it as crosses above 0. That's one choice. Or you could be does not equal 0. Right? But for our purposes here, we're just going to do greater than 0. Greater than 0. Right? So first condition. Now, of course, what happens is by default, if a long entry is greater than, a short entry by default will switch to less than. Now, you got to be careful about values if you've got positive and negative values, because if I were to type in 100 here, get it, 100, it's going to put 100 down here, right? It's just going to mimic it. But for an indicator like the CCI, which has positive and negative, you'd have to put negative 100 here if you wanted that. Right, CCI going above, below 0, so you'd have to go negative 200. Just a little something, right? That might throw you at first when you're putting this together, like, why is it not working, right? So because you got to have the minus down here. So just something to be aware of here. It's something that caught me when I was first, I've been working for this now for about a month, and some of the little, the trial and error, the learning curve here. Hopefully I'm going to shorten that for you with this demonstration, despite the fact this may be kind of tedious to go along with here. We've got to do at least several of these so you can get started creating your own, and you're not going to run into these problems that many that I did when I was first starting to put some together. So CCI plus or minus here, so we've got that, so I'm not going to change that. So in this particular case, we're going to go back to fixed value of 0, right, and down here less than 0, right? So we're not going to change the outcome here of this algo. MACD. We want the difference to be positive, right? So thus histograms above 0. So the MACD, here we go here, right? So let's just walk you through if I was doing it from scratch. So if I went MACD, Right? Again, we're just working with native Ninja indicators. Right? Just a reminder, you can use any indicator you own. Any. All right, so we at MACD, right? So I want the difference. Well, here's just default settings, right? I want the difference here. That's what I'm looking for. I want the difference to be greater than 0. Right? In other words, I want it to be positive. Now, greater than 0 is the default here. Now, this won't be the same. And that's interesting. Oh, it's just the nature of these two indicators. That both of these, it's about greater than 0. Okay, well, next up, we've got the EMA. So same kind of thing. I want the price to be greater than the 21 period EMA. Less than the 21 EMA. These are pretty rudimentary, right? It's pretty straightforward here. So that's all we're saying here. So note here, putting this together. So if we're after 9:30, the CCI is greater than 0, the difference is greater than 0, and the price is above the 21 EMA, right? All of those conditions met, right? Well, one more to go, and that would be that the OBV, the 5 period. So again, if I were bringing this up new, I'd go here. I'd go to OBV, where you've just downloaded, assuming you're interested in following along here, if you want this, the OBV modified. So I get a nested, the OBV plus a moving average. So I can look here, 5 and 10. Okay, I want the plot. I want the OBV plot, not the signal line. Cancel, right? I want that OBV plot to be greater than the signal line. So I'm going to go here, and I'm going to go OBV, the 5 period. I want it to be greater than the signal line. The signal line, oh, here I got to change it, is the signal line here is the 10. Okay, it's signal line. So the 5 is greater than the 10. For a sell, I want the 5 to be less than the 10. Right, less than the signal line being the 10. Okay, right, so those are all of our conditions. So thus, just to put it all back together, the price is above the 21 EMA, the CCI is above 100, the MACD difference is above 100, the 5 OBV is above the average of 10, and we're above the 200, right? Those are all the conditions that are set for an entry into this algo. Let's do the exits, right? Now the exits, very important here, and this I spent about 2 hours pulling my hair out when I couldn't figure this out. Be sure that on exit that you have or highlighted, not and, or you're going to be going through what I went through as I couldn't figure it out. So you want this to be on or. So, for example, if we get here, oh, let's see here. Well, we can use this here. If the CCI of the current bar is greater than 205, now 200, it will hit 200 often, damn near within a tick or two. So an example like this, if the CCI gets below 200, I'm using 205 because you will occasionally, it'll hit 200 and turn. It's very consistent with the CCI. One of the reasons I like it, there's so much, it's so predictable when we get to that point. When we get beyond 200, I want to exit. If I'm short, I want to exit. If I'm long, I want to exit. MACD difference, if it crosses back below. So if I'm on a buy with the difference above 0, if it crosses below 0, I want an exit. It's not this and this, it's this. Or the OBV crosses back for a long here. So if we're going long here, if it crosses back under, I want to be out. Those are exit signals. So this or this or this, or if the price crosses below the 21 EMA. Or if price crosses the 200. Those are all the exit conditions. So let's see if I can do it this way. If I go to entry signals, you'll see the entry signals will come on, right? And that's a green being buy, red being sell. So the first thing, when those are on the chart, let me push that off for a second. This is a good way to just kind of take a first look at what you've got, because there'll be some obvious identification as to whether or not you're on the right track with your algo. Number one, the most obvious is above the 200, based on where the 200 is, there should only be buy signals. Below the 200, only sell signals. Right? That was one of the conditions for an entry. And then you want to start looking for consistency to make sure that what you've coded, all those conditions are consistent. So, well, we just pick any of them, right? So we pick this one right here. CCI is above 100. The MACD difference is positive. The OBV has crossed the signal line. So all right there. What a nice looking setup, right? Nice looking trade right there. All of those conditions are consistent. Right now, the one caveat here would have been you're buying right into the initial balance. That would have been the first test, although Obviously, we get to and through, right? So I'll put that aside for another discussion, right? So, but those are all good examples, right? So we can look through it and say, okay, well, we had that big down day followed by the taking it all back. We're below the 200, nothing but sell signals. So you're on the right track. Now, then it's a matter of refining. Okay, let's make sure I've got everything just right. So then we can come back here, and then we can take off the entry signals and we'll put on the exit signals. Now, exit signals, because these are ORs, you're going to see a whole lot of them, right? Because it's OR. So the premise is that it doesn't know whether you're in the market or not, right? It's just showing you all the conditions, right? So based on everything that we put in the exit conditions, if any of those are present, you're going to see an exit signal. But it would only be relevant to your algo if you're in the market. So don't let all of that freak you out. You're thinking, oh my God, I've got something terribly wrong. Not the case. We just get that out and we'll put on our entry signals. And then we'll start looking through this and going, okay, well, this seems pretty good here. Seems pretty good. No trades in the overnight, right? Here, of course, good example here where the market has been above the 200. Now we crossed the 200. Now, not only are we below the 200, we're below the 21 EMA. Right? So you start to see that this is right on the edge, right before it went to minus 200, right? Which is often where you see the market bounce. Right? This is very consistent with the CCI. It's one of the reasons I like it. And back here where we're below the 200, right? Just looking to double check. That's all you want to do is just make sure, because I promise you, as you're first putting a few together, there's going to be likely a conflict between what you are looking for and what you get. It's going to be a function of something here. You may, again, as I showed you with the example with the CCI. Oh, I forgot to make that minus 200. Just little things to look for. Usually you can find it. It's just a process of going back through. And then if you had something that didn't look right, let's go back over to entries. And we'll show this as an example. Oh, here, let's make this a little bit smaller. As an example with the ATMs. So you might look at this and you can start turning these on and off. And if you see there's a problem, well, you say, oh, okay, well, maybe it's the CCI is the problem. If I turn that off, am I going to get fewer entries? Maybe it's the OBV crossing, right? Is that so? You see here when one added or the one wasn't there, is it over the 200 plus or minus the 200, right? We're going to see radical changes there because it's not factoring that into any of the filtering, any of the conditions, because these are all ands. So all of these conditions need to be present to take a trade. Turn it on, turn it off, and you'll see real-time examples of that. Okay, so this is a relatively simple indicator-based algo, right? Hopefully it's clear what we've done. These are just the opposite signals. So CCI above 100, okay, well, great, right? But if it comes below 100, get me out. MACD, the difference is positive, great. If it becomes negative, get me out. OBV, same thing. If we go below the 21 EMA, get me out. If we go below the 200, get me out. That's all you're doing. These are opposite signals. Now, it's not uncommon for people to start here and not put the exit signals in. All right, and that's going to dramatically affect your ATM and your P&L. So I would encourage you to do a little testing, right? Maybe try it with just entry only and see what you get. And then I think what you're likely to find is that the risk parameters and the potential winners will be unrealistic. So it's putting these back on is how you're going to control risk. So I encourage you to spend some time getting clear and comfortable with the exit signals. All right, so with all of that said, let's go back to entry signals. And well, of course, now I've done this here, so let me bring up the ATM here. Oh, this has been optimized here. Well, we'll just go ahead and do it as though we were doing it from scratch. So I have a net result here, but before we do that, and I don't want to bore you with this, so this can take a little bit of time, not long. This might take 90 seconds max, maybe less depending on how much you have loaded. But this is the ATM optimizer. Now I've got all sorts of ways that I can optimize this. You can start with just saying, okay, well, let me start with. Oh, let me close that here. Let me start with my standard ATMs. Now, you probably likely have a series of ATMs that you typically trade with. It might be, if I'm long, I've got a 16 tick target and I'm an 8 tick stop. Just to give you a simple example, something along those lines. Or maybe you're doing or some sort of ATM with you got a scalp and runners and that kind of a thing. So all of those are reasonable places to start. Of course, you can add positions here, right? If you want to add positions here or multiple contracts. But just for your basic optimization, it's not a bad idea to start with one. So we just start with one and just kind of see, are we on the right track? Do we like the results? Is the risk within our risk tolerance? So while you can start with some of your preset ATMs, it's not a bad idea to see what the algo engine is going to come up with for your optimization. So let's go to optimize. Now, here you got a lot of possibilities here. So first is, okay, how many positions, right, are we talking about here? And again, if I say one, that's not necessarily one lot. This could be 10 lot, and number 2 is 50 lot. It's up to you, right? It's how many conditions, how many different entry points will it optimize for? Let's just keep it simple for now. Let's do 1. Okay, in the sample set of data, what it's doing here, what this 80 means, is that for your back testing, it's going to use 80% of the data, and then it's going to stop optimizing, and then it's going to take what do I want to say, ended with as the optimization level, and it's going to forecast forward based on those settings the next 20%. So you get a back test and a forward test, and so you're not taking advantage of any particular advantageous trade in the last 5% of the optimization level of the back test period to increase the net result of the optimization. If I said that as clearly as possible, it'll be easier to see when we do it. Okay, so number of generations, 300 is probably a good start. I think the default starts at 100, but you can go up to 300 easily. Minimum population is how many trades. You don't really need to do much here, but so if you're going with 30 days of data, and you can see all the stripes here being buys and sells, you may not, but you might want to say, okay, I want a minimum of 20 trades. Maximum, maybe you don't want, something to where it's trading, every bar, right? So commission costs will get out of control. That would be something for refinement once you get a net result here. Minimum profit factor, 1.5 to 1, that's not a bad starting point. Minimum win rate, 50% win rate, reasonable to start. Now, this expected value, drawdown, percentage, and max drawdown, I've just thrown some numbers in here that would be reasonable for an S&P. So maximum loss per trade. Essentially what I'm saying is that for any single entry, for any single long or short, I don't want to see a loss greater than $355, right? And I just gave it a little cushion. Same thing with max drawdown. I don't want to see anything over 7. You might start with, nothing over 750, but then give it a little cushion. Now, what are we optimizing for? Well, we can optimize for any of these: profit factor, win rate, net profit, average R, average return, expected value, drawdown percent, or drawdown dollars. So again, much of this would be refinement. If you got close to something, you're like, oh, it's coming in at win rate's only 42%, right? And so then I could optimize for win rate. But most of you are likely, good starting point is, okay, well, net profit, let's optimize for net profit given these parameters. All right, so let's start with that, and here, I'll go ahead and start this. And now what's going to happen here, I won't make you sit through all of this, but what it's doing is it's working through a series of potential results, and it's kind of doing it's kind of like a bracket, right? So who's the best of these two, and the winner moves forward. Best of the next two, winner moves forward. And it'll do that for 300 generations. Wherever you see red, the optimizer is telling you it's outside of the parameters that you asked for. So I wanted a profit factor of 1.5. I'm only at 124, 91 generations in. I wanted a max drawdown of 777. I've got 2,000 here. Max loss, 378. That's drawdown and dollar loss, right? The percentage here, 99%. That can be a little deceptive because if the first trade is a loser, you might look at it and go, there's 100% drawdown here. But so that would be less an area to focus on. But max drawdown in dollars and max loss on any given trade, those would be things to perhaps focus on. So as you see this here running, maybe it won't take so long here. I'm going to go ahead and pause it here as we get through the last round of these. Okay, it took about 90 seconds. And here are the net results. Now here's what, as I mentioned before, you're gonna have these big gray boxes on your chart that you may or may not. So I can take them off quickly if I want to. But here, for our purposes here, I want them. I want to see what I've got. So this is not a bad result. Oh, here, I'm put that up here on another monitor. Oh, so we can focus here. Okay, win rate. Well, I wanted 50%. I only got 43%. Total trades. Well, that's a lot of trades, right? And this is over 30 days, and it's pulling out of that 30-day window, out of that sample. It traded for 22 days. The average trades per day. Well, that's pretty high. 20 trades a day. Remember, this is a very basic indicator-based algo. We can refine this, but it's just good process to get through this and kind of see, a good starting point. Average win 137, average loss 86. Well, that's good math. Biggest win 1308, biggest loss 378. I like that. Remember, we were trying to keep it around 377. 350 in that range. Now, max losing streak looks like it was a couple of trades here that, well, we had a max losing streak of 9 trades, but the size of the trades was relatively small. So our max losing streak was $1,000. Looks like maybe right here where we had that drawdown. And then drawdown, same thing, right? So, but the net result here, and we can move this a little bit. This is what I mean by it can be a little deceptive. So you see right here as with the initial trades here, as we go negative, well, okay, right? So that's distorting the numbers here. I don't pay a huge amount of attention to that. Things that I'm looking for whenever I'm considering running the algo, I want to see what my average win and average loss is. And I want to see the biggest loss and the biggest winner. If I see the biggest loss is something substantial, that I know I wouldn't, if I were trading myself, I'm not going to sit through a drawdown of $700-800, right? Yeah, certainly not on a single lot. So that's the kind of thing I'm looking for. Okay, am I on the right track here? Well, certainly the net P&L here is encouraging, and this is there we go. So this is what I was trying to awkwardly verbalize here. What it's doing is taking 80% of the sample of the data. Right? Remember, we got 30 days of data, and that's what's giving you this number here. Is this number here? It's giving you that number, and then it's of that 80%. You see it represented here, and then the last 20%. It's taking this optimization, and then it's running it forward in time. So if you took everything I have said here and ran it forward, what do we have a big drop, a big rally, or is it fairly consistent with what we've seen in the past? So you see here, right? Okay, we got a little drawdown at the end. Now, granted, again, you have to use a little common sense here. So this is including the last half an hour of the day on Friday before a holiday weekend. Oh, let's get over here. Right? You got some losers here. Are you going to be trading here in the last half an hour before the holiday weekend? Probably not, right? So just a little common sense in terms of, okay, well, let's go through the numbers here and make sure that this, you don't have to leave this thing on, right? You can turn it on and off, right? So another thing to consider during the lunch hour, you might consider turning it off when the market slows down, so you don't get chopped up. Just something to think about. You don't have to turn it on and leave it on all day. Right? You can be selective about it. And when you turn on the auto trader, you can have it go long, short, continuous, one shot, much like any our other auto trader products. So you don't have to just leave it on and just let it run for the day. And if it's in a trade that you don't like, or for news, and something happens, close the trade. Right? I wouldn't be so concerned like, oh God, I changed it a little bit, so I'm not going to get my 48.65. That's not our point, right? The point is refining an algo that has good foundational bones, if you will, and then we can refine from there, looking for, okay, you want to go through your trades and say, okay, what was good about this trade? Am I getting the result here? Am I getting a good enough return relative to the risk that I'm seeing here? And this really a process of going through these. Now, this is a lot of trades. It's a lot of trades. Commission. 1759 trades over this 30-day period. It only traded on 22 days. A pretty high commission count, but still nicely profitable. So next thing we can do here, let's bring this back down. We can put the trades on. All right, so this again just part of the process of reviewing your algos. Start putting the trades on, see how they look. Because you're going to see some things like, well, the first thing you want to see is it firing with the appropriate conditions. So, for example, I can see here we went short. We're under the 200. The CCI is below 100. The spread, the difference is below 100. The OBV is below the average. But look at the CCI. Went to, what did we get there? Almost negative 300. So I know if I just put this right here, if I look at this, well, I look here, I say, oh, well, it's minus, that's beyond 200, so I want to be out. So yes, it got me out. Market rallies a little bit here, and then ultimately we get the turn. Here's another one, right? We go below 200. That tends very, very commonly, right? That's a pivot with the CCI. So we look there. Now, one of the tools that's native to Ninja, let me get that off. I know that's annoying because I talk with my hand on the mouse. Particularly as you get into more sophisticated algos that are working off of signals, your best friend is going to be the data box. So as we look here and just kind of use this, so as an example, I'm going to go back to my crosshairs here. So if we look on this bar, right, so we can refine and be sure all of our conditions have been met. So here, number one, what do I see? I'm below the 200. Yep, okay, check. I'm below the 21 EMA. That's in maroon. Check. The CCI at that bar right there, the CCI is, do you see it right here? It's right where you, I got to move my mouse. The CCI is at minus 8609, but the next bar, I'm at minus 214, right? So you can see it enters and exits right away because the condition for the exit has been met. So yes, I've got a winner here. It's a $108 winner, but look how quickly I'm out. But then, no, I want to be out because look how quickly the market turns. So if the CCI didn't get me out, crossing back above the 21 EMA would have gotten me out. The cross positive here and the cross positive here, all of those would have gotten me out. So that's my point where I was focused earlier on the exit signals, because we don't want to just stay in this until we get stopped out up here. If those conditions change, if we go the other direction, I want to be out as fast as I can. That's how you control the risk with your exit signals, and you get numbers over here that are tolerable, as opposed to giant winners, giant losers, or something that's being carried overnight. The first things that I put up here, I couldn't figure out how to close them because they were carrying them overnight. It was like I got a $900 winner here that I would have never carried overnight because I didn't have the exit signal set. So very important that you spend a little time here and you get clear on that, and then you want to go back through and double check. Right? Are all the conditions correct here? What you want to ask it is, why did it get out? That's what you're asking yourself, right? Do I have this written correctly to where I understand why it gets out here? Why am I in and why am I out? This one looks like the MACD crosses over, right? Gets you out, as the CCI didn't go too far. Now, it won't always be the result of an opposing signal. It may be relative to the price targets that are set in your ATM that's getting you out because you hit your target. Right, a lot of variables there in terms of why it's in, why it's out. Here's another one, right? So we go right to the IB low. CCI gets below 200, right? I want to be out. Right now, kicks back. Nothing in the overnight, all good again. Here, now look, we're above the 200, so I want only buys. Right here, I'm below the 200, so I can see that pretty much everything I have said, I'm on a double check. It's important that you go through these, but all of these look like they're working just fine. So now I come back here and I go, okay, am I comfortable trading this? Well, the drawdown here is perhaps larger than you want. So then that's the process of going back to refine. And you might look at that and say, I want to optimize here for perhaps less drawdown. Right? That might be the next place that you go. But I think, right, so these videos don't get too long, as it's easy to just continue to go on and on with these. I think this is a good starting point. This is something that you should be able to replicate on your own. It's relatively simple. Again, these are all freely available. Everything's native Ninja, with the exception of the OBV modified, which you can get from their forum, from their ecosystem website. This should be an easy algo for you to create. Now, don't get frustrated if it doesn't come out exactly right the first time. But again, you're gonna be back here looking at the logic, going, okay, do I have it right? Okay, does it make sense? Are the longs and the shorts, is that correct? Do I want this greater than, above than? Same kind of thing, right? That's where you're likely going to find your problems. It's going to be here, or it's going to be something you don't have set right in the exits. Right, so as we see here, if I look at that, would I trade that? Yeah, I'd trade that. There's not much reason not to. The only question is, can I make it better? And can I reduce the drawdown? Right, that would be something that you might factor in, and that might be subbing out a different indicator. I mean, something you're going to use differently. I deliberately wanted to stay away from any of our indicators, because of course I didn't want the implication to be, oh, I've got to have Trade Devils indicators for this to work. No, any indicator that gives you parameters, that gives you hooks to work with, right, can be used. So you'll see as we continue on with this playlist, which I think will be very full featured for the next couple of months, as we continue to add and we bring in examples of algos that customers and members of our Discord have created, some of which are already being posted in our Discord. So if you're interested in some of those examples, which you can just copy and paste and just load right in, because again, as you'll recall, if I close this, if someone was sharing a template with you for the algo, well, if I go to Algo Studio Pro and they've shared that template with you, we're just going to go to this section here, and you're going to put it right here. So if they shared a file with you, you're simply going to download it and then upload it right here, just like you'll see here. You'll have .algo files. I mean, I got a lot of them, right? But again, I've been at this for some time, right? Working, experimenting here. There's so much potential here. Again, I promise you, you don't realize how much potential is here when we start getting into some of the price action and retracements, pullbacks, swing structure. There is so much you can do with this, but it's important that you get a good start. Just, okay, let me put a basic one together. So that was my goal here. Hopefully I've helped you a little bit there. And this is what I was talking about before, if you want these on or off, right? Because sometimes it's kind of a pain to have them always pop up there. So often I will leave them by default. I will leave them off, and then if I want to bring them on or off the market, again, if I'm tweaking and I want to play with it here, well, I can just take them off right here. Okay, so hopefully that gets you started. We're very interested in your feedback. Already we're getting good suggestions from those that are using, that are trialing, that maybe have some experience working with algo design. So we're excited about it. We think this will be a great addition to our lineup, and would encourage you to trial it. Download, come over to the Discord, bring in a couple of the templates that are already posted up in there. I will post this one in the Discord as well, just as an example. I think anything that we post in this playlist, we'll post the templates so you can go back through, and that's how you learn, just seeing how other people have done it. Okay, guys, with that, I'll wish you well, and we'll see you in the Discord.